Hello lovely people out there. How are you all doing? I'm Kate Hill and welcome to another monthly special feature. This time I'm going to talk to you about what happens to property during an economic shock. So today I'm going to talk to you about property during economic shocks. What happens during an economic shock? What do you really need to understand about that economic shock? And what happens to property during these times? How does property, does it survive and recover? Now, for those of you wondering what qualifies me to be standing here or sitting here today, talking to you about property buying, owning and investing, like who the heck are you, Kate? Well, I and my team at Adviseable, we are professionals in this field. We have been in this space for a long time, advising and helping people. We have seen most things happen in the property world. And unlike a lot of other real estate people out there, we are also qualified property investment advisors. We don't get paid by property marketers or developers to sell you stock. We are completely independent and we do genuinely care about getting you the best outcomes. And we are experts at what we do. We give you the best, honest and balanced commentary and content on our channel about all things property. So before we get started and before we do anything else, please subscribe to our YouTube channel, hit that notification bell so that you get all our news updates, suburb analysis and expert hints and tips around buying and owning property. And as important, if you're enjoying the free content and you're finding it useful, then please click on that like button too. We really, really do appreciate your support. So what happens during an economic shock? Picture the scenario. You like property, your parents own property, you've bought property, you've invested in property perhaps. You think that property is the most stable asset class. What can possibly go wrong? And then boom, catastrophe. .com crash, global financial crisis, recession, COVID-19 pandemic. Many of these things are unprecedented and you are a quivering, anxious mess thinking, oh my gosh, what have I done? Shall I sell everything and go crawl under my bed and curl up in the fetal position? You are not alone. That fear is completely normal. You'll want to hunker down and protect yourself and your family. There will be a lot of uncertainty about the future of your health perhaps, the economy, the property markets, the business world. No one knows what the full economic toll will be at that stage, with job and business losses mounting by the day. Consumer confidence will be really low and people will be worried about their jobs. And of course, job security and consumer confidence are critical when people are making big purchasing decisions, such as buying a new car, a house, or an investment property. So what is it that you really actually need to understand? Well, you need to understand, first of all, that it's completely okay to feel fear initially. It's really hard to keep a cool and collected head about you when all you're hearing and reading is how the world as we knew it is ending. So the question is, do you actually really need to understand, for example, that the GFC was caused by excessive risk-taking in a favourable macroeconomic environment, increased borrowing by banks and investors, as well as regulation and policy errors? Now, you might find all that interesting, nerds like me certainly do, but do you actually really need to understand all that? It can help, of course. So while these events are definitely there, they exist, they happen, they will also keep happening, they will continue to exist. Most mainstream media will never be on the side of good news. They will be on the side of the most dramatic headline that gets your attention and that gets the most clicks. There is a proven science that tragedy, drama, sadness will get your attention a lot more quickly than happiness, good results and good news. Look it up, it exists. It's why they report the way that they do. And have you noticed how everything these days is unprecedented? So therefore, most of what you read is intended to shock and scare you back into that fetal position and keep you logged on and clicking every 10 minutes for the absolute latest update about which company's gone bust, which high street store has closed, which CEO has resigned, or what the latest is on the particular tragedy that might be happening. They need you to rely on them, so they will create uncertainty and fear. It's in their interest. And I'm not saying, of course, that these events aren't important or significant or scary or whatever else. What I am saying is that you need to keep a cool and considered head about you and realize what their agenda is when you're engaging with it. The media are not on that side. They are not on the side of considered and responsible or even accurate reporting sometimes. And you do need to know this when we're in the middle of it all going on. You need to keep a clear head. You need to stand guard at the doors of your mind and watch what you let in. Please read quality and well-researched journalism, unbiased journalism if possible, if you want to stay informed. Listen to actual experts in the field, not your panicked friends at the family barbecue. But console them and calm them and reassure them, of course. But don't take your news and investment advice from them. The media just want your attention. They need it for your ratings and for their advertising dollars. So what do you actually need to understand if we come back to that question? So one of the major lessons that I've learned from previous downturns is the importance of taking a long-term perspective, which always outsmarts short-term reactive thinking. It's always the property fundamentals that really matter and drive our markets in the long term. So things like demographics, supply and demand, affordability, available finance, the local economic trends. And like I said earlier, it really is human nature to find it difficult to buy your new home or perhaps invest when everyone else is running around thinking that the world is coming to an end. The most important factor to understand is that after each global disruption so far, there has been an increase in property prices. And there is no reason to suggest that it will be any different if the underlying property fundamentals are still strong in whatever is going to be next upon us. So what happens to property and how does it survive and how does it recover? Well, to start with, a couple of small points. Property is not a very liquid asset class, right? So people can't just quickly sell a house tomorrow. That process takes time, whichever country you live in. There are also far greater entry and exit costs that really do make people stop and think a bit more about what they're doing. So if we are talking about, which I am, normal suburban property, not rural, not some small mining town, not a small tourist town, but your very typical suburban home, then what happens to property in these economic shocks? Well, generally, to be honest, not a lot. In the grand scheme of things, not that much. During and after the GFC, nothing happened to property and its actual underlying asset value in these areas. Property prices were not affected by the swine flu or by the SARS virus or the dot-com crash. The share market can get decimated almost immediately. It's extremely vulnerable to sentiment, and we can see it happen in front of us, that share prices rise and fall by a few percent or many percent in a whole day. I'm not saying that shares aren't a good investment. I think they're great, but they act completely differently. And obviously I'm focusing on property in this video. Property tends not to react so quickly, if at all. Residential property is different. It's an essential commodity. It's what we call shelter. It's not the share market. And the value of property doesn't change over the course of a day, a week, or even a month. A typical property will be owned by someone over a long period, say 7 to 10 years. It doesn't change hands very often. It breeds the term, it's safe as houses. We all know this term, and that term exists for a reason, because it is such a stable asset class. You are trading in an essential commodity that is not a volatile asset class. Good, well-researched property will not lose its intrinsic value. The fundamentals of the property market often don't change when these economic shocks happen. Property price is essentially driven by demand from population growth, a strong and stable economy, strong migration numbers as well. And remember that sentiment is very short term and all about the here and now. It will pass. There will be short-term effects, of course. Job losses, maybe a recession, increasing debt, low, if any, income growth. Changes of governments can also have, obviously, an impact, both good and bad. The list goes on. It really does depend on the type of event that's happening. Property transaction numbers can fall, decline, but again, the values remain relatively stable in these good solid areas. Property is about the long term and the future, not the here and now. There will be so many ifs and buts that you read about. Every event will be different and unprecedented, with different leaders and different conditions. But what happens when things calm down and stabilize? There is always a bounce back. There is pent-up demand that drives prices back up again. If you're reading that property has or is going to crash, then look for the evidence. Where there are very strong property market fundamentals, like I've said, then there is no historical evidence whatsoever that property responds that way to these types of events. It is incredibly important that you keep all that in mind while the event is actually happening, because there are real opportunities out there. And I truly believe that there will be more economic shocks to come. Other world-ending events will happen in many different formats. Good solid property that you have bought in a good solid area where you have gotten those basic fundamentals right will always be okay. Might wobble a bit in the short term while that sentiment out there is wobbly, but in the medium to long term, it will be a solid investment, whether you are actually investing or whether you are buying a new home to live in. Please don't forget to just quickly subscribe to our channel. Leave us a comment below. Don't forget to hit that like button too. We really, really appreciate your support. And I will see you again for another special feature soon. Bye.